And now to cut through the noise and simplify the numbers and also make sense of the headwinds facing the economy in this rare Sunday budget presentation, we have with us Mr. Abreesh Balika. He is an independent market analyst. Thank you so much, Mr. Balika, for joining us on the broadcast.
Thank you for having me.
Mr. Balika, the headline macroeconomic numbers look optimistic, with GDP growth has been projected at 7%. Inflation is under control and also the fiscal deficit, which is seeing a steady decline. However, foreign capital outflows has been a key concern. Do you expect the budget is going to address foreign investor outflows from Indian stocks?
Yes, I think the finance minister has to address that, because our markets would have crashed if not for the retail inflows to the mutual funds, which has balanced the FI outflow. And I think the major issue for the FIs was the taxation introduced in 2024. In 24, the markets were at lifetime high, so the valuations were high, and the rupee was decently stable. And then the finance minister introduced a major taxation for FIs in budget 24. So that was a trigger for the FIs to start booking out. And now, I mean, when you see the markets are coming down, rupee is depreciating, I think it's a double whammy. So every other FI is rushing to the exit. And we've seen a huge negative figure in the last 2 years. So I expect some changes in the taxation in this budget. And the other thing which I expect, and I hope it's done, is the dividend taxation, because that is double taxation. You're taxing the corporate and taxing the recipient again. So if these two things are changed, I think you'll see a reversal as far as the FI inflows are concerned.
Mr. Balika, you mentioned the Indian rupee briefly. I just want to focus a little more on that now. There has been a decline. There's no denying that. It's very clear. What can one expect? What kind of effect can one expect from this union budget on the Indian rupee? Because that is a key concern. This is vis-a-vis the US dollar.
No, like I said, I mean, one of the things which has to be done is to ensure that the FIs start investing back into India. So that can be done only with the tweak in taxation. And I think at the same time, you will have the RBI and government also intervening, to stabilize the rupee, because it will also have an effect on inflation. I mean, although we say that rupee depreciation is good for exporters, but generally it's a short-term benefit, because post that, the fresh orders are negotiated accordingly. I mean, especially in the IT industry, which we have seen are the major forex earners. The effect of the rupee depreciation doesn't last too long.
Right. And Mr. Balika, there is a clear gap between the macro level economic optimism that we're seeing and also the financial stress that many many middle class people are also facing. How do you think the budget is going to address these concerns today?
Just to supplement what Diksha said, Mr. Balika, a lot of our guests joining, they're not foreseeing much change to the new tax regime. Over to you.
Absolutely, because we have seen a major change last year. So generally, if you look at the budgets in the past so many years, when a major change is done in a particular year, I mean, that is not touched in the next year. So I really don't expect any major changes to personal taxation, except for the fact that the capital gains exemption limit, which was introduced and it's quite low, I think that can be raised to about 2 lakhs. You could have fixed deposit tax exemption limit being raised because it's quite low at 10,000. So I think that is what should help the middle class. So I think that would be increased. And from a capital markets perspective, I think the securities transaction tax, which has not been touched for a long time, I think that could be reduced.
Also, Mr. Balika, the BSE and the NSE on a Sunday, we're going to be seeing these real-time changes or reactions coming into the announcements. How do you foresee this trading day to proceed?
See, typically on the day of the budget, I mean, the markets remain range-bound till the budget is announced. And once the announcement is done, and even during the announcement, you have very wild swings. But then what I've noticed over the last decade or so, the effect of the budget hardly stays beyond a few days. Because if you see the last 10 years, only in 2 years, 2016 and 2021, the effect of the budget lasted beyond 10 days. So this is basically because a lot of policy decisions are taken throughout the year outside the budget. So, like it was a different case in the 80s, 90s, and 2000. But right now, if you look at the markets, the effect, like I said, doesn't last beyond a couple of days.
Right. And Mr. Balika, according to you, what are some key sectors that we should be on the lookout for, which will see some major developments in the union budget today?
No, I think the various sectors which we should benefit are the focus sectors for the government, which is defense, railways, infrastructure, I think, we are already at the peak of the allocation. So I think government will possibly look at some innovative funding as far as infrastructure is concerned, because unless infrastructure grows, we cannot have that Viksit Bharat by 2047. And I think there will be a special focus on the sectors which have been affected by the US trade tariffs, like textiles, gems and jewelry, aquaculture, light engineering, specialty chemicals. I think these are the ones where there would be a special focus. And I think we should also be future looking. So I think there could be some framework for AI. I think there'll be a clear roadmap as far as that is concerned.
Mr. Balika, also, when we look at structural reforms, there's a lot of talk on reform. We've been discussing with our guests all these months leading up to the budget. One major structural reform that you think is required and that you're expecting.
I think one of the major structural reforms are required as far as the labor is concerned, as far as the employment is concerned, because I think that is going to be a major concern going ahead, because there is still a huge gap between the expected skills and the skills available. And I don't think the skill India has actually worked out well in the last couple of years. I think there's still a huge gap. So we need to see as to what the government does as far as this is concerned. Because, having a lot of unemployed youth, I think is a huge issue for any country.
All right, Mr. Balika, thanks so much for joining us here on the broadcast and sharing all your insights. Always a pleasure speaking with you. We'll have lots more to discuss as soon as the announcements start coming in from Delhi. That was Mr. Ambarish Balika, independent market analyst, joining us from Mumbai.